Hey there, Sundial Growers and investors. It's Rod with Pow Group. Welcome back on the Pursuit of Wealth for a Sundial earnings update video. I was going to just cover it in the MJ video today, but I thought I'd do a separate video for the community. I know a lot of people are interested in Sundial, so I wanted to come on and share my thoughts. So obviously had a bit of a mixed bag today in terms of the reaction from these earnings. So just looking over Seeking Alpha here. So they had a Q1 net loss of 134 million. The revenue was Canadian 9.89 million, down 29% year over year. They did have adjusted EBITDA for the first time in the company's history from continuing operations was 3.3 million, so 129% year over year increase. And the company sold 3989 kilogram equivalents of MJ in the first quarter of 2021. So a 45% decrease over the previous quarter sales of 7,247 kilogram equivalent. So we saw some negative numbers in terms of their top line. So their revenue came in a little less than anticipated, but that was kind of to be expected after Tilray and a few other LPs had lower than expected revenue in terms of the estimates. So again, just taking a look here, this is on the US side in US dollars. So revenue of 8.18 million USD, which was short of that 11.5 million. So we technically missed there on the revenue. Beat slightly on EPS, but came in there flat at 0. And moving on to the chart. So again, their overall number, like the positive EBITDA was great, right? So if you look at Hexo, for example, they've had positive adjusted EBITDA last quarter, but they also beat the revenue estimates, right? So if you can beat the revenue estimates and not post a loss and have your good top line revenue as well. So if you have good top line numbers, and then bottom line, if you have good positive EBITDA on your way to positive EPS, earnings per share, that's all fine and dandy. But I think because of the sell-off in the broader market as well, obviously gave a bit of a mixed bag. We had the whole sector. So the whole MJ sector was weak today. So again, check out my MJ video and the broader market video from earlier today on a full recap of the broader market and the MJ space. So moving on, I wanted to highlight some key levels here on Sundial, though. If you are looking for entries, this wouldn't be a bad time, in my opinion. We have the 10-month moving average sitting at 67 cents. We also have the 50 weekly moving average, which is the only one defined based on the limited history. But we have the 50 weekly moving average there at 70, and we have the 200-day moving average at 69. So 69 for the 50 or for the 200-day moving average, and 70 for the 50 weekly moving average, and 67 for the 10-month moving or the 10-month moving average. So that's a mouthful. Say that 10 times fast. So 67 cents, 69 cents, and 79 cents could be a nice entry here if we do see weakness in the. We are up just about 2 pennies here after hours, so about 2%, 2.5%. So if we do see weakness in the overall broader market tomorrow, that could provide a nice gap down open potentially for the broader market and Sundial. And again, we'll be watching potentially for an entry around 67 cents or maybe a loss of 70 cents. And if we could, that, in my opinion, would be a great entry for a long-term hold, as we have a lot of support in that area. And we do know that once we bounce here, it's going to be a significant bounce, in my opinion anyway. But we could see an EMA 12 and 26 bear cross on the EMAs on the weekly time frame. So if that were to occur, we could see more downside. And on the day today, we closed at the low of the day. So again, not what bulls wanted to see after a nice strong start to the day. It's like, oh, positive adjusted EBITDA, woohoo, and then nope, waterfall, 5-minute downtrend, SPY just bled all day long, and the overall broader market was extremely weak, and then that translated in weakness into the MJ sector. But look at the EMAs. We've been rejecting at the EMAs. We had an attempt back here, it looks like on the 16th of March. So we attempted to break it back above, but we didn't change the daily trend, and it was just a bull fake out and a dead cat bounce straight into a new lower low. And now we need to get over the EMAs. So EMA 12 rejecting again today. We got over it, but then rejected, failed to close above it. So if we can close above it and change the daily trend back to an uptrend at the same time, that will give us more confidence versus this attempt back here where we went straight off the lows to the high. We didn't change the daily trend, and that basically was the signal, right? We didn't have any daily trend change, and if you would have acted on that, backed up the truck and said, okay, we closed above, and then you enter, but you end up getting a huge fake out and a massive bull trap because we didn't change the daily trend. It was just a dead cat bounce into a lower low. So again, if you are looking for entries a bit more aggressive, maybe you're entering now looking to scale in. We're approaching daily oversold conditions as well. So again, lots of support around the 70, 69, and 67 area. So if you are looking for an entry, now might not be a bad time. Again, this isn't financial advice. This is for educational and entertainment purposes only. But now wouldn't be a bad time, in my opinion. Like I said, we are up here after hours, but we'll see if the S&P 500 holds its support. We did have a double bottom there at 70 and 69, and we had a nice reaction to that earnings, up about 16%. So congrats to the bulls who were able to sell this morning before the sell-off, and it's a potential daily bear flag at this point that's looking to confirm daily downtrend. So all about that 67 support and whether or not we can hold that into the end of the week and whether or not we can change the daily trend. And on the weekly time frame, we've been given a heads up now for multiple weeks. We've been saying in the group that SNDL has been extremely bearish. We were given a heads up back here on the 29th of March. So at the end of March, we were basically we lost the 10-week moving average. The MACD and stochastic were trending lower in a hurry, and there was just nothing to see here. It was an absolute, just train wreck for the most part. And like I said, we had about a month and a half heads up, and we've been saying that in our group now for a while that SNDL has been extremely bearish. And even on these earnings with positive adjusted EBITDA, not seeing the reaction. Again, you could blame it on the market and say, oh, well, SPY was consolidating. But again, what's going to happen if we continue to see SPY consolidate? We haven't even really pulled back that much on SPY, and we haven't really seen fear pick up that much, in my opinion. So that's obviously going to impact each individual name. And again, the revenue and the top line just didn't cut it in terms of the reaction today to that to those numbers. So let me know in the comments below if you're still bullish or if you're bearish on SNDL long term. A lot of people speculating that they could be a potential buyout target, and it may have a nice potential opportunity to be acquired by Hexo. I'm not 100% sure on that. I'm not too privy to the types of synergies that would bring to each business, if they would complement each other very nicely. Not completely ruling it out. Would be a nice, in my opinion, probably a nice fit, and a nice, in terms of the product portfolios, they seem to be very similar in terms of the portfolio. So you never know, never say never, but lots of speculation going on lately, and with good reason, as there's been a ton of M&A activity in the space lately. So best of luck into tomorrow. Thanks again for joining us on The Pursuit of Wealth, and we'll see you on the next one.